Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you again for being here. And for today I want to share, as always, some of the charts that I used to follow on a daily basis, and starting with the Canadian dollar. One of the few that I want to share with you. Actually, I will try to cover one by one of those instruments that I have on my list. So stay tuned, and again, if you enjoyed this video at the end, please press that like button. It's always important for me to get that feedback from you if you enjoy or not this content. Of course, as always, this is educational purpose only. I'm not here to put you or to motivate you to put yourself at risk inside the market. If you want to do that, I believe it's because you have already experienced dealing with the markets. So it's not easy, and sometimes the market will not correspond to our expectations, and we need to embrace those moments and to embrace our losses. So which is not the case what I want to show you for today, because the market has been let's say friendly for us at this point, and let's cover some of those patterns. So for the Canadian dollar, I was expecting more bearish. I was expecting a lower low below that daily fractal. The reason why I was searching for that is because we have that golden Fibonacci extension level, an extension of this swing high. So I was expecting just a few more points below the current lows or the current daily fractal support. It can happen. Eventually the market can trade that price zone, but currently on a lower time frame we can see the divergence between the lows. We can see that on a higher time frame we have that clear bullish divergence between the current or the most recent lower lows. And if you go into a 1 hour time frame, we can see the structure the market has formed. So basically we have this bullish halt-bat pattern printed at 113% Fibonacci extension of this last swing high, completing the sequence. This is kind of an M-shape pattern, most usual M-shape configuration, and this is one of the variables for the bat pattern. So usually we search for the 88% Fibonacci extension or retracement, I'm sorry, for a bounce. And if the market starts to trade below the previous lows, we start to search for, or we can search for the 113% Fibonacci extension as a potential alternate bullish bat pattern in this case. So that pattern triggers this most recent bullish momentum for the Canadian dollar, and we are now approaching the previous structure highs position at 121.42. So I believe that if the market decides to trade above, I'm pointing more to this crab pattern than this alt-bat pattern. So this is an internal alt-bat pattern. I call it an internal bat pattern because it takes in consideration the swing below the previous structure highs. So we have, of course, this internal swing before this one. So this takes in consideration the most recent swing and Fibonacci ratios or variables, if you wish. So basically I'm searching for potential pressure zone before breaking above the previous structure highs, in this case the daily fractal, and if that happens, if the market finds some pressure here, I believe the market will start to retrace, and if that happens, I believe the market can retrace back to the previous structure resistance, so back to the 38% Fibonacci level. So if the market starts to feel some pressure after completing this pattern, so it's important to remain below the previous structure highs. And if the market decides to violate this structure, and when I say violate, usually we will see the price rejecting the previous resistance and starting to squeeze higher. And if that happens, I will point to this bearish crab pattern. So this is the golden Fibonacci extension. Usually the market will feel some pressure at those Fibonacci levels. So if that happens, I will point to this golden Fibonacci level, and that guides me into the Dixie because it's printing almost or very similar behavior, and with the bearish crab pattern also printed at, or projected at this case, at 1992. So we have also the Dixie after breaking above this triangle. So I believe there is room also for the Dixie to target the previous structure highs. I note that we are already trading on a 2-hour time frame. There's a clear violation of the 200 moving average. So as you can see, the price has been respecting, has respected the 200 moving average as potential element of resistance. And in this case, we are already trading above that 200 moving average. So I believe there's room for more upside, even if limited, for the Dixie, for the dollar in general. So which, well, that may imply everything that is dollar related to trade accordingly. So the dollar versus CHF, dollar versus the Canadian, they should follow, at least in terms of momentum, they should trade in the same direction of the Dixie. That's of course inverted with euro versus dollar. We can jump into this one fast. Another, and inverted with the Dixie, of course, a bearish crab for the Dixie, a bullish crab for the dollar, for the euro versus dollar. So that's targets the 38% Fibonacci retracement for euro versus dollar. So I'm pointing to 120.56. So this is a 38% Fibonacci retracement from the monthly fractal to the most recent previous structure highs. So this is a 38% Fibonacci retracement right there, converging with the, well, not only the previous structure lows, but also the bullish crab pattern completion point, the golden Fibonacci extension. So as we can see, and I believe I shared this chart before, we have this trend line resistance. That trend line was broken, and we have also a support rejecting not only the 200 moving average, but also that trend line. So we are now approaching, not approaching, but we are now trading below the previous daily fractal. Let's go into a 4 hours time frame, because on that time frame we can see we are already trying to violate again. Actually, we are threatening the violation of the 200 moving average again. As soon as the market approaches this golden Fibonacci extension, I believe the market may find some pressure, and the completion of the pattern will suggest a bounce from this price zone, from the 38% Fib converging with the crab pattern. Now let's go to the cable and let's see. Let me try to show you a bigger picture. So this was one of the trades that I pushed for my subscribers. You can visit my website at tradingjazzfx.com, and from there you can subscribe my Telegram private channel where I share some of those trading opportunities. Some of them I push for myself, of course, because I trade based on what I expect from the market. So I don't do any copy trade. I don't trade based on any type of algorithm or any type of software. I don't use any of those. So I only use those patterns that I found inside the market. So I trade based on my pure humble expectations. So and I tend to share those among my subscribers, of course. The main objective, of course, make money, but above all is to try to force our brains to get familiar with the patterns and to try to take advantage of those patterns inside the market. that avoids a lot of mistakes, a lot of emotional reactions inside the market. We only trade what we see. If I'm convinced that the market will react accordingly, I tend to share those opportunities with my subscribers. So this was one of the let's say the mid-long term opportunities that I shared recently for the cable. And I saw this as a potential inverted edge and shoulders once the market finds this resistance above. So once the market forms this resistance and starts to pull back, I started to see this as a potential inverted edge and shoulders. And I assumed once the price breaks above the previous structure highs, I assumed the price will trade higher. So I pushed the trade with the decent, let's say, not so decent because it corresponds to 195 pips below our entry. So we needed to adjust our initial position size if you need to do that, if you need to respect a specific criteria in terms of risk for that specific trade, for that specific time frame, for that instrument, you need to adjust your position size, initial position size accordingly. And that being said, so that was my suggestion. So I pushed this trade with one first target at 142.36. So this was kind of a retest of the close prices, as you can see, a retest of the close prices of the previous highs. I target that close price. The price starts to pull back after touching that price zone or entering that price zone, and now actually we are threatening again those previous highs. So as we can see, I draw this as a potential cup and handle, and this handle can be pushed even lower. So we can see the price trading a few points lower, forming that handle. Let's go into a 4 hours or a lower time frame. Actually, let me delete some stuff that we don't need here anymore. This was just to show you. And let me also, I believe I have a lot of things. Actually, I don't need that. So on a lower time frame, on a 4 hours time frame, I shared also this bearish. Actually, I pushed the trade for this bearish shark pattern as soon as the price completes the pattern at 141.94, assuming, and based on the default expectations, assuming the price will fall to the 38% fib. So at the time that I pushed the trade, we have already new highs above our entry, so our entry zone. So basically I was targeting the 38% Fibonacci retracement from these structure highs. So as we can see, the price starts to print one initial reaction and then retested the previous structure highs, printing a double top. Once the market prints a double top here, or a technical double top, I was expecting as soon as the price violates the previous structural lows, that should trigger the double top. And as we can see, the price approaches the previous structural lows here, but with no clear decision. So we have no clear violation of the structure. And basically we can see that with a close above the previous low. So if we start to see candles closing completely closing below the previous lower lows, that should trigger that signal that we were expecting at that time. So what we see then, it was the invalidation of the double top with new highs above the previous structure. So that invalidates, actually the market prints almost a triple top, actually one fourth time retesting the previous structure highs and rejecting that price zone again, and finally the market breaking above and printing a new daily fractal. Once the price prints that fractal above the previous structure highs, starts to fall. So taking into consideration this bearish shark pattern, we can expect the cable to trade at least a 50% Fibonacci retracement. So note that the price has already found the recent support right above the 38% fib. So I will not be surprised to see the cable reacting without breaking the most recent lows, reacting here and trying to push even higher. So as I said before, on a long term, I remain my bullish bias until the market proves me that I'm wrong. And at this point, I can expect something like a symmetrical ABCD pattern right there, or a symmetrical three-wave structure. If that happens, I will pay attention for a reaction at this price zone. And the reason why I'm expecting at least a 38% fib is because I want to see at least a minimum criteria to form that handle for that cup formation, on that cup and handle. So I need at least a 38% fib in order to be at least confidence that the market, as soon as the market violates these structure highs, that should trigger a trade opportunity for this cup. And this cup may offer a nice opportunity to try to go one good attempt to try to go along with the cable for a midterm, on a midterm perspective. So that's what I'm expecting. I still, on the short term, I still bearish until the market finds some decent support here. And as I said before, it can happen from the current lows. It can happen from here, and if the market decides to trade above the previous resistance, that will confirm this was a nice support here, and we can wait for a breakout above the cup or above the resistance. But at least show me the criteria, show me the variables, and I need at least these criteria over there, at least a 38% Fibonacci for the shark pattern. And I'm not even searching for the 38% Fibonacci retracement from all the cup, because if I'm waiting for that, I need to wait for a bit lower. And if it can happen, I'm waiting for the 38% Fibonacci retracement because it's the minimum expectation that I have for the bearish shark pattern printed there, at least. But usually the shark pattern, as I said before multiple times, tends to target the 50% Fibonacci retracement. So let's keep that Fibonacci retracement right there, which is a default target, since we are here to learn process and to learn those variables. So basically the bearish shark pattern tends to search for, or to retrace to the 50% fib. So if you search for convergence between all those Fibonacci levels, we can try to see that convergence or search for that convergence. And we have that 38% Fibonacci retracement converging with the default target for the shark pattern right there. We can use also our default or basic extension projections, default extensions for the external behavior, and one default extension from our internal swing. This one we will search for the 150, 161. So there's kind of a cluster box, a small box here right below the current lows, so between the internal extension and the 141% Fibonacci extension level. So that may offer some pressure, but I'm pointing to these major convergence eventually between the 38 and the 50% Fibonacci retracement levels that may offer more pressure. So I will point to these. I will start to partitioning my position, of course, at the 38% Fibonacci retracement level, but we should pay attention to this level for a larger or a stronger, eventually a stronger bounce for the cable, and that may offer more confidence if the market decides later to trigger that cup and handle. What I'm missing here? Nothing for now. Actually, let me just, now that I draw these 3 waves here, it reminds me another eventual. Let me go into 1 hour time frame charts, and let's measure this retracement here. So we have the almost the 88.6. Let me plot this, and let me also check where the market finds resistance above golden Fibonacci as resistance. So let's consider, we need to plot this for both the butterfly and the crab pattern. The butterfly will search for the 127% Fibonacci extension. Actually, let's skip the 141, and also the eventual crab pattern at 161. So let's plot all those 3 levels. So we have nice convergence here. Let me try to show you those. Swing high 78.6, golden fib 127, 141, so something in the middle, and swing high 88.6 or almost 88.6, the golden fib and the golden Fibonacci extension. So I'm pointing, so as we can see, we have that convergence between the potential butterfly. Let's ignore for now that crab pattern, but we have some convergence between these butterfly price zone between the 127, 141, so the bullish butterfly pattern, the 38% Fibonacci retracement between the bottom or the lows of the cup and the current or the most recent resistance, 38% fib, the 50% Fibonacci retracement, which is a default target for this bearish shark pattern printed at 224. So that's, we expect that Fibonacci as a default target for the pattern. And we have this bullish butterfly pattern right there. So let's tag this 38% Fibonacci level, 140.27. So that's what it is. 127, 141% Fibonacci extension, 50% and 38. Nice convergence there. Of course, we don't need to mention that we are also trading a few points above the previous structural resistance, and a retest of this price zone will not be a surprise. If even if you want to trade this butterfly pattern, we need to take into consideration that the market can be pushed to this previous structure to retest that price zone again, and if that happens, that makes part of the process. And let's use this example to create kind of an order. Let's say we want to create an order to go long with the cable, and let's use this example, let's use this material. So by default, this is a crab pattern, or this is a butterfly pattern, I'm sorry. So by default, we will search for a bounce from this price zone, and we should target the 38% Fibonacci retracement level as our first target. So we have an entry point with the default targets, and as we can see, that pattern, if formed, will suggest a retest of the previous structure support level. As you can see, previous fractal right there. And in fact, let's adjust some of those fractals for the cable, because those are not correct anymore. Daily and 4 hours fractal, everything okay. And by the way, this is also the monthly fractal resistance. Right there to the bottom. As you can see, we have a daily fractal, the most recent highs printed above the previous highs, the previous monthly fractal resistance. And we have the daily support remains where it is, and the daily, the most recent fractal below. And that's what it is. And actually, in fact, we have already a fractal, a lower degree fractal resistance. So as we can see, if printed, this bullish butterfly pattern, if completed, will suggest a bounce and a retest of the previous structure lows, the previous structure support level. So we can measure that expectation. So we assume this as our first target, so that corresponds to 85 points. And as I used to say, I don't enter the market to lose more than what I expect to win. That being said, the maximum risk that we can use for this trade is the same as our reward. Of course, we are trading on a harmonic pattern, and usually we don't need to use those type of risk measurements, or we tend to try to minimize our risk when we trade harmonic patterns or advanced pattern formation. So what I tend to do is to decrease these into kind of a 1-2 risk reward approach. So we are trading for 80 points. I will trade for, let's say, 45 points risk reward. That corresponds to 1-2 risk reward approach. So I lose $1 for every $2 that I win in this setup. And of course, if the market decides to maximize my profits at the golden Fibonacci, trading the golden Fibonacci level, which is a second target for this setup, well, that will help me maximize my profits. So, and this is just one of the examples. And one thing that I need to make clear is exactly this factor on my strategy. I never enter the market to lose more than what I expect to win. So basically, I tend to search for a situation that offers me an opportunity to create a situation like a 1-2, 1-3, 1-4 risk reward approach. And then if the market decides to trade even higher and to maximize my profits, I have a strategy to try to trail this position. If the market decides to go higher, I will activate a trailing stop behind above my second target in this case, because I'm trading a bullish pattern. So if the price decides to trade those levels, I will try to trail that position. So this is, of course, just to explain the strategy itself. First things first. First thing we need to do is to wait for the formation of the pattern. It's an if-then situation. So if the market prints the pattern, then we will measure the reward, and we will measure our limits. We will adjust our initial position size accordingly to the risk that we want to assume for this specific trade, taking into consideration our amount of capital to trade in our accounts. So after all those considerations, we will trigger the trade. So this was just one example of what it can happen, not only for the cable, but for euro versus dollar, as I showed you before, with the crab pattern projected below, the Australian dollar triggering at this point, as I showed you before, and I shared this chart on Twitter on a 4 hours time frame chart, triggering this lower degree edge and shoulder. So I'm shorting the Aussie for more bearish momentum without ignoring the potential pressure price zone right below the next zone. In this case, targeted 76.17. So that can offer some pressure for the Australian dollar. Eventually, the market will be forced to retest the current price zone again. That can happen. So this is the crab pattern at the golden Fibonacci, and then if formed, the price can try to find the previous structure support and resistance again. But let's wait and see. We have this. There's huge expectations for the Aussie regarding these major heads and shoulders too. So because we have actually both, we have two heads and shoulders, one lower and higher degree events. So basically, this smaller one or this lower degree can also trigger a retest of the previous structure lows. That's what I'm expecting at this point. So at this point, I will ignore, in terms of trading opportunities, I will try to ignore this pattern here, even if the market decides to bounce and to retest the next zone again. But as I said before, so first of all, I'm assuming the market will retest the next zone, or that, let's say, the higher degree next zone for these heads and shoulders. And of course, the violation of this support may also trigger even a deeper retracement for the Aussie. Let's see what will happen. Again, let's not ignore the potential pressure zone at 76.17, but ultimately we will see a retest of the bottom. We can see also this round shape bottom of this structure. I will try to well, I'm trying to go there to retest this structure. Let's try to push. I do my praise every night to see the Australian dollar targeting these lows again. Joking, of course. So, moving forward, the Kiwi. Some of you are familiar with this setup. I pushed also this trade among my subscribers, the 2618 trade setup, printed at the golden Fibonacci retracement level after this double top. So we have a violation of the neck zone, we have support below the neck, we have a bounce to the golden Fibonacci retracement level, forming the 2618 trade setup. We expect nothing more at least than an ABCD symmetrical pattern. So as you can see, 71.84, this was my default projection and my default first target for that pattern. Of course, we are in this case trading, the market is trading in our direction for now. Let's see what will happen. We have also very similar as on the Aussie, the cable, the euro versus dollar, bullish crab pattern at 70.50, and as we can see, the Kiwi previous neck zone from this double bottom with this crab pattern projected again to that price zone or close to that price zone. So let's pay attention to that possibility also for the Kiwi with crab patterns there. Nothing to say for the Australian dollar versus the New Zealand, at least nothing for now in specific, unless if the market, this is a daily time frame, so I'm paying attention to this type of structure, what type of structure the price is trying to build here. In terms of patterns, one eventual cipher pattern, but I need to see the price trading above the previous daily fractal resistance. If the price decides to approach that 78.6, that will print the cipher pattern below the weekly fractal, the major fractal resistance levels. But if at least for now we are only threatening on a daily, and the 200 moving average, daily moving average, as potential element of resistance, of course. CHF, another one that I was expecting, at least the formation of this bullish shark pattern at 224% Fibonacci extension. It can happen if the market decides to start to fall from the current price zone, but we have also inverted with all others a deep crab pattern, bearish one, of course, similar as for the Canadian, and the Dixie, the bearish crab pattern also for the CHF. Let's tag this one, 91.70, similar as the Canadian, as I showed you before. The Norwegian krone with another one projected also at 847.24. Mexican peso also, this one already very close to that structure, to that price zone, that Fibonacci level, but also, as you can see, if we connect the dots, let's say if we connect those highs, we can see the price threatening this kind of a trend line, structured trend line here. But as we can see, we are also trading above this wedge, and that wedge, I believe, usually it will trade the highs of the wedge. So I believe the market, there's room to target the previous highs also for the Mexican peso. But as I'm showing you here, there's a bearish crab pattern at 20.22. So golden Fibonacci right there, so I will not be surprised to see some pressure as soon the price touches the golden Fibonacci level. By default, the crab pattern tends to search for the 38% Fibonacci retracement level, as we can see, nailing the previous daily fractal resistance, previous structure highs. If the market forms that crab pattern at 168 extension, the market will, the pattern, let's say, will suggest a retracement, which will nail the previous structure resistance level. Dollar versus the yen, similar expectations. We are now threatening the daily resistance, but we have also the crab pattern projected at 1010, and right above the most recent highs, a bearish Gartley pattern completion point. So this one I shared before. The market forms this kind of a cup here. So of course there's always room to target the previous highs. So that bearish crab pattern synced with all, or converging with all other dollar related pairs, well, let's see if the market is strong enough or strong enough to target those levels again. Euro versus the yen, very fast approach here. Let's go into almost a daily time frame, 12 hours time frame chart. Bearish shark pattern completed at 133.39. We have a new daily fractal resistance above our entry point. We're still shorting this one, so I'm still expecting a deeper retracement after completing that pattern on a daily time frame. So we are now threatening the violation of the most recent structure trendline support. So I admit a clear violation of that structure should trigger that deeper retracement that we expect after the formation of the pattern. Pound versus the yen, another one printed at 113% Fibonacci extension. Note that this pattern can also squeeze to the 168 extension that will force 162.75 to be reached. So let's stay tuned to that possibility also. But on a lower time frame, if you go into a 1 hour time frame, we have this most recent ascending channel being threatened again multiple times. I shared this chart as the first time the price approaches this major trend line and approaches also this descending structure support trend line here, and once the price approaches this price zone, it bounces immediately to that trend line resistance again. So let's say that I draw this descending structure before even the market starting to think about that. Of course, pure luck, but we keep inside. The bad thing is that we keep inside this range and nothing to do for now. We're still trading, as I said before, we're still trading that convergence zone between this major shark pattern printed at 155.63 and this minor or lower degree bearish crab pattern at 155.65. So we're still trading that price zone. I admit, of course, this bearish shark pattern or this bearish crab pattern already trading the default target zone. But we still have targets for the major shark pattern, at least at the weekly fractal. So pound versus the yen, all the strength for the yen should trigger more downside for everything that is related to the yen. Of course, everything versus the yen should trade lower if that is the case. I can be wrong, but based on the pattern that we have, I'm expecting to see the yen pairs trading lower. Australian dollar versus the yen, another one that we have with one eventual crab pattern projected at 84.13 or very close to the previous daily fractal. So nothing more than kind of a similar crab pattern to the previous ones that I showed you before. This one for the Australian dollar versus the New Zealand. The Canadian dollar, I was expecting on a daily a few points higher, so I was expecting for the 91.50, so for the bearish crab pattern completion point. Note that we're still trading inside this ascending wedge, and I will not be surprised to see, since the market is now threatening this structure. Actually, if we connect those dots, we can see the price is already actually it should trigger a nice setup here, but we have also this eventual trend line support. So we're still trading inside this flag after this swing high. So the expectation that I had before, eventually I was not wrong, and the market will bounce, print a new high, and after touching that Fibonacci level will start to fade. But I'm not sure about that. Nothing is granted. I don't know what the market will do. I just need to expect something, and I need to wait for something to happen. At this point, I can think on a short side. I can try to search for the best moment to go short with it without touching that Fibonacci level and without printing that pattern. But I still need to wait for some confirmation. And if I delete all those lines here, I can try to show you. So let's say I have an order to short the market at that Fibonacci level. So I have an order to go short with the Canadian dollar versus the yen as soon as that bearish crab pattern completes. But what we can use if the market decides to, well, not print that pattern, to fail the completion of that pattern, I can see these as a potential edge and shoulders. So I can see these as a left shoulder, the neck, the head, the right shoulder, and if the market decides to trade below the previous structure support level, that should trigger an edge and shoulders, and that will target 90.16. This is the default target for that pattern, so I'm not expecting that pattern to offer me a short with the magnitude that I'm expecting for the pattern that I'm expecting above. But at least it's a starting point. If the market decides to fall from this price zone, then eventually it will offer me an opportunity to manage the position and to start to partitioning my position and try to trail this position if triggered. At least that's what I'm expecting. If the market decides to fail the formation of this pattern that I showed you before, of the crab pattern at 91.50, and if the market decides to trade below that fractal support again, that should trigger, not the fractal support, I'm sorry, if the market decides to trade below that next zone, the fractal support, not the daily but the most recent one, at least the most the 4 hours fractal support, 90.60. So if the market decides to trade below that level, I believe that should trigger the default target. That should trigger the pattern with default targets projected at this price zone, the 200 moving average, the 200% Fibonacci extension level. So more bearish also for the Canadian versus the yen. New Zealand already fallen below this pennant or this wedge here. I was also expecting for more upside to form a sharp pattern at 81.86 or at least 81.32 to print this lower degree bearish crab pattern. Also, as you can see, the price decides to recover. We're still threatening those major fractal resistance levels, so we're still trading this price on. Everything can happen, unless, of course, if the price starts to push below the current or the previous lows, which may force the violation of this ascending structure trend line. So that should trigger more downside also for the New Zealand versus the yen. For now, it's still holding quite well above at least the most recent trend line structure. Euro versus the pound, nothing to say here. I was trying to plot something on a lower time frame that never happened. At least for now, I'm waiting for a clear decision, or above or below the support or above the resistance. Nothing to say for now, or at least nothing that calls my attention. Euro versus the Australian dollar, at least for now, recovering the daily fractal. Nothing specific to say after the violation of this next zone above. So we still have targets, or the default targets for that pattern, for that double bottom, at 160.34. So everything that happens inside this structure here, that I don't know when it will stop. Let's see. Eventually a fifth wave before following the same or the previous swing direction eventually. So a 5-wave structure inside this channel, it's one of the possibilities. but nothing that calls my attention, at least for now, not even on a lower time frame, in fact. Just this potential double bottom, or the double bottom confirmed already, with the default target projected above. So I still, if I need to say that I have a bias for this pair, I will remain bullish until we reach the default target projected there. So 1 hour time frame, euro versus the New Zealand, I shared both of those patterns, and I shorted this one yesterday that I shared among my subscribers. Also we shorted this pair with our targets at 168.88, so that's the 38% Fibonacci retracement. So that's my first target. So after completing this, or after forming this bullish cipher pattern, the market also forming the bearish bat pattern above. So we try to take advantage from this one also. Pound versus the Australian dollar, now threatening the daily fractal after printing this kind of a third drive formation or three drives formation. I was expecting at least a retest of the bottom of the structure, but the market, as you can see, finding some support at the 200 moving average and being forced into new highs. So we are already trading above the previous highs, and we have also a crab pattern projected above and a major one at 185.88. So this is the one that I'm waiting for, or at least to see if the market forms above it, above the major fractal resistance. So I need to see a threat of this major fractal. Pound versus the New Zealand, we shorted this one from these highs. We shorted this bearish shark pattern at 168 extension. So of course, golden Fibonacci, the market has found some support below that golden fib, and now I'm projecting one eventual crab pattern also at the golden Fibonacci extension level, 2.0. Let's see if the market will go there. It's a nice psychological price zone, so let's see if that crab pattern forms above for the pound versus the New Zealand. The Dixie, as I said before, the crab pattern above. Now let's go to the gold chart, gold and silver. Some of you are familiar with this Shining channel. Some of you have the same channel in your own charts. What I can show you for dollar is this bullish crab pattern projected at 161, or completed at the 168 extension, with the new fractal support projected at, or printed already at 1855. So as you can see, and even if you go into a lower time frame for a clear picture, we have kind of a inverted edge and shoulders here. It's not the first time that we identify that pattern after a top, a fast swing low, and then the price printing or trying to seduce you with that inverted edge and shoulders. But when converging with one harmonic pattern, which is the case, that will increase significantly the probability will increase, of course, for the price to react accordingly to the default expectations that we have for both of the patterns, for the inverted edge and shoulders and the crab pattern. So the crab pattern usually tends to find support and to search for the 38% Fibonacci retracement. But if we measure the default projection for the inverted edge and shoulders, that will put the price trading the 50% Fibonacci retracement level. So we have that convergence between those Fibonacci levels, which may guide us into the second target, for the crab pattern, which is the golden Fibonacci level. And as we can see, we have also the golden Fibonacci level converging with the previous structure lows. So at this point, I will not be surprised to see that inverted edge and shoulders, if triggered above the next zone, to offering this opportunity to go long with gold. Okay, so that's what I'm expecting to see. On the other hand, we have silver, which is approaching our target for this shark pattern printed at the golden Fibonacci level. So we have that shark pattern printed there, new resistance above. The price starts to fall, finds support above the 38% fib. So actually the market failing the minimum expectation. If we have a minimum expectation for that setup, it's a 38% Fibonacci retracement level. And a retest of the highs, or at least one attempt to retest the previous structure highs, and starts to fall again. So I remain my expectation, my default expectation, to see at least a 38% Fibonacci retracement being reached for silver. What we have also, it's very similar to any of those charts that I showed you before. Projected below a bullish crab pattern at the golden Fibonacci level. That will force the price to trade my default target for the shark pattern printed above, and that will complete also the bullish crab pattern converging with the euro versus dollar, Australian dollar, the cable, the New Zealand, every other charts that I showed you before, converging with this chart for silver and gold. Gold already trading the golden Fibonacci level. Attention with that difference between both. Now let's go into WTI. So this is crude oil. Let's go into a 4 hours time frame. Actually, let's go into a higher time frame. Let's go into a daily time frame. And we have these, actually let me change these into a weekly. We have this trend line resistance, as you can see here, this descending trend line resistance. So this is kind of a multi-year trend line, and I have already patterns projected above. So that doesn't mean the price will go there. I'm just saying there's a probability for the market to squeeze higher, and if that happens, we should pay attention to these price zones. Of course, the reason why I'm projecting those patterns above, they are supported by the ratios projected below, or the ratios presented below the monthly fractal, specifically between this swing high, this swing low, actually this swing high, and then this movement that follows. So of course I don't know if the price will go there, but based on the ratios presented below, I can let's say if this is a 15 minutes time frame chart, I have no reasons not to believe the market will complete, at least will search at least for the golden Fibonacci extension level. But of course this is a weekly time frame. It will take a lot of time to achieve those levels, but I assume if crude oil decides to stay above 67.98, let's say the 68 price level, if the price decides to settle above that price zone, I admit there's room to be pushed even higher. And now with all the countries opening to after this COVID confinements, and with people going again to allow it to go out and to travel and all that, I believe there's room for crude oil to trade higher from this price zone. As we can see, I believe this is a very important price zone. If the market decides to settle above it, I believe there is room to trade higher. We have one position, so we pushed one position with crude oil. So I'm trading kind of a cup and handle formation here. So we triggered this trade above the previous structure resistance after this pullback. So we triggered a trade above this previous structure high. So let's see if the market will follow our expectations. I admit a pullback. Of course, I need to admit a pullback if the market needs to retrace. I admit that pullback, but in general, in a long-term projection, I'm bullish for crude oil also. SPX 500, I shared these multiple times already, also on Twitter, I believe. The potential for this inverted edge and shoulder that I shared before. Actually, we have also a setup going long with the SPX 500, based and supported on that inverted edge and shoulders. So let's see if the market will follow that. In the meanwhile, we have these lower degree edge and shoulders. In the meanwhile, the market has formed that pattern, and it has found the most recent support a few points above the default target zone for that lower degree edge and shoulders. In general, I remain, or in the long term, of course, I remain bullish for SPX 500. I have no reasons to in terms of bias, to change that trend. At least I believe all of us are bullish for SPX 500. We have no reasons to believe that it's now the market will trade 30% lower. It's not the case, I believe. So I remain my long-term bias as a bullish, but of course I trade what we see. I trade based on specific patterns that we see, and if the market decides to offer me an opportunity to go short, I can try to search for that signal, or for that specific signal, to try to take advantage from that pattern in that case. It's not the case in this point. I remain positioned for the long side for SPX 500, as I said, based on that inverted edge and shoulders. And of course, we have also one eventual, not the 161, but the 113% Fibonacci extension, one eventual alt-bat pattern projected at 4273, which is starting to vanish with this sideways moving process. I believe the market will start to fade the possibility to form that pattern, but I will not ignore, and that will depend the market reaction above this weekly fractal. A strong and fast reaction targeting those Fibonacci levels above, that will print the crab pattern at 4376. Of course, this is pure speculation, but that will depend on the strength and how fast the market will achieve those levels. So if we see, let's say, a violation of this ascending, or this kind of a megaphone formation, if you see a violation of this weekly fractal resistance with a strong momentum, I believe there's a possibility to form that crab pattern above. And attention, because we are already, SPX 500 is already, I believe, now paying attention to this trend line. We are already threatening this trend line resistance, or at least the most recent structure trend line resistance. A violation of this trend line may suggest a bounce for SPX 500 after a three-wave structure. Down, kind of an ABC, We can see this as an ABC correction after a three-wave structure. I will not be surprised to see a major bounce from the recent support zone. So as I said, I remain positioned for the long side. Of course, usually everything that is related to the yen pairs will converge with the market reactions on SPX 500, more specifically the dollar versus the yen. But of course, if the dollar versus yen starts to fall aggressively, all other Japanese yen related pairs will tend to follow. But usually SPX 500 can also guide us into some of those momentums for the yen pairs. That being said, everything that is yen related, if SPX 500 starts to trade higher, some of them may struggle to trade in the direction that I showed you before, which is bearish. Some of them I'm expecting to trade a few points lower. So, and if SPX 500 starts to trade higher, I believe some of them will struggle to fall. But that's what it is. That's what the market is trying to showing me in on those charts, and we need to follow and make our selections, make our choices. Moving forward, DAX, I shared before, we have charts, we have patterns projected above 1575, 1576, so I'm waiting for those to happen. I shared this once the price was trading this 127% Fibonacci extension, which is, by the way, the bearish butterfly pattern. But at that time, and based on the price action that we have at that time, I was expecting that retracement, but not as deep as the market has offered. So I was expecting at least a minimum expectation after forming the butterfly pattern. So I can expect at least a 38% Fibonacci retracement, and I was expecting that, but I wasn't expecting a deeper pullback for the DAX. But as we can see on a 1 hour time frame, 60 minutes, we can see the price finding some support at this 200 moving average. At this point, I'm still waiting for those patterns projected above. One of them at 1575, so I'm pointing to this eventual crab pattern above 1576. So if that happens, we may see again a pullback, and as I said multiple times, I trade based on the default expectation, 38% Fibonacci retracement level for the crab pattern. As we can see, this we are now I'm now projecting a lot of crab patterns because all the ratios here are trying to project or to suggest the formation of that pattern, but we don't know if those patterns will form, and I don't know if the market will touch that level and will even trade higher. I need to observe how the market will the market conditions and the market environment once the price approaches that Fibonacci level. What we do know is where the market invalidates that pattern. We know the default targets, but we also know that if the price decides to trade above, we also know the price will invalidate the pattern, or we know the pattern will invalidate. So that offers an opportunity to short with targets, with stops. We just need to adjust, as I said multiple times, adjust your position size accordingly to your time frame you are trading, the risk that you want to take, and move forward if you want. Nothing to say for the Bund and the 10 years for now. Huge gap, at least for the Yuanda. I believe this is the Yuanda, CBOT provider. Huge gap there, the Bund finding some support. This is kind of a 4 hours time frame chart, bullish. This is a bullish, kind of a bullish shark pattern projected at 169.52 and completed at that price zone. We have new support below that completion point, so I will not be surprised to see a bounce for the Bund from this price zone. Default targets for that pattern suggesting a visit to the weekly fractal, the previous structure highs from this wedge, so the highs of this descending wedge. And as we can see, we're still threatening the violation of this descending wedge trendline resistance. So if the price confirms that, and I draw this eventual parallel structure here because we don't know what the market will do here, it can happen to create kind of a major three-wave structure inside this parallel structure. So nothing assures us what the market will do here. But ultimately, even if the market decides to pull back, I admit a new bounce and at least one attempt to approach these previous structure highs, and the default target for after the violation of this wedge, I will target the highs of the wedge in this case. So let's see how the Bunds will react also. Bitcoin, what to say for the Bitcoin? Another flag here, more bearish, expecting. So I'm expecting more bearish for actually all the crypto markets, suggesting more downside. Stellar, one of the cryptos that calls my interest for no specific reason, but just because it has a nice price action without those extreme behaviors that we see on Bitcoin and on Ethereum, more calm, let's say. Bullish shark pattern also for the Stellar, 1925. Dodge, I was expecting, and I still expect, at least a 50% Fibonacci retracement to be reached at some point. As you can see, multiple times the market finding resistance at the 38% Fibonacci level, one first time there, another one here. So since I'm bearish for all the cryptos, this is another one. Eventually the market will trade even lower, but based on the pattern the market forms, we can expect at least a 50%. We can see the first one acting very well from the golden Fibonacci level right there, the price printing the shark pattern right there, the golden Fibonacci level, and then the 50% Fibonacci retracement as default target for that shark pattern. Then, as I projected, I projected both of them before the price completes this shark pattern, and then the price completes also the shark pattern at 224% Fibonacci extension. This one forming a great bounce, or offering a great bounce from the 224 to the 38% Fibonacci retracement level, rejecting to trade the default target zone. So I'm still waiting for that to happen based on the default expectations we have for the shark pattern. The Nasdaq, eventually more upside. We're still inside this major ascending wedge. Also, I believe the retest of the highs of the wedge, eventually a violation of that structure, and we have also a crab pattern projected there. But what I want to show you also is dollar versus the Chinese yen. Let me show you this. Oh, the Chinese yuan, that's the correct. Let me show you this on a weekly time frame. Some of you are familiar with this this chart. I shared this multiple times on Twitter. The technical double top, once formed, I called your attention to the formation of this top and the eventual violation of the next zone. So I projected this next zone before the violation of the structure. Once the price violates the next zone, it gives sequence to the double top, trading the default target zone. As you can see, that price zone has offered very small support, but it has offered nice resistance later. New lows below the previous lows. We have nice divergence. We have nice bullish divergence in place for the dollar versus the Chinese yuan. So at this point, a violation of the most recent structure, and you can go into a daily time frame to plot that structure, and we are now threatening the violation of this structure. I believe there's room for a major bounce from this structure, even if, well, the market fails the completion point of this scrap pattern at 34,400, but it misses just by a few points.
Webinar online.
Sorry about that. This is Forex Analytics webinar starting at this point. And if you want to join us, you already know where to visit our website. But as I was saying, I will not be surprised to see, even with the market failing the completion point of this scrap pattern, I will not be surprised to see this major bounce for the dollar versus the Chinese yuan. Let's see what will happen. If that happens, eventually the market will target the previous monthly fractal printed right there. So that being said, it makes some sense at this point, if the market decides to bounce from this price zone, to target the previous structure support level. Let's see what will happen. I can go into a lower time frame and try to identify the next pattern, which is not so clear at this point because the market is trading inside this kind of a parallel structure at this point, or at least for now. We are trading inside this structure, at least. Nothing to do with this for now. I need to see something, and at this point I can see some eventual pressure zone here, or we are approaching the previous structure highs, previous structure resistance level. I can see some pressure there, and if the market decides to retrace, we can see this as a potential inverted or a lower degree inverted edge and shoulders. That can trigger more upside, but let's wait and see, or at least a retest of this trend line. So we are now threatening the violation of this trend line resistance. If the market decides to trade above that trend line, it needs to find resistance at some point, and eventually a retest of this structure again, or this current price zone. That's a confirmation of a rejection of this zone, should trigger more upside. And as you can see, I projected already in just in case of a strong bounce from this price zone, or a decent bounce. It doesn't need to be so strong, but a decent bounce from this structure and a violation of the previous structure highs, and I will start to plot the possibility to form sharp patterns above, between the 161 and eventually the 224% Fibonacci extension level, so 1 or 2. But first of all, the 38% Fib, previous monthly fractal support level, I admit a retest of that price zone. So that completes my insights this week. I hope you enjoyed this video, and as I said multiple times, that nothing is granted in our lives, and that being said, don't assume those charts as potential trade events. We need to observe the market, and we need to to understand that the market sometimes will fail with those expectations. So, but that being said, I hope you enjoyed this presentation, kind of, and the educational content that you can take advantage from this video. At least that's my objective here, is to try to share with you something useful for you. And as I said before, if it's not useful for you, I'm sorry that I'm not feeling that expectations on you, but or the expectations that you have on me, actually. But you need to search on other source for for the information, or the holy grail information that you are searching for. My objective here is just one, is to share with you some of those patterns, some of those ratios and criterias, and for you to observe, and then to embrace the process and start to learn how the process develops. That being said, I hope you had a nice week trading the markets and learning how the markets behave. I wish you all a beautiful weekend, and we will be here the next session next Monday to see and to try to take advantage from what the market offers. Thank you very much again for being here. Don't forget to press that like button if you really enjoyed this video, and all the best for you and for your families, and see you soon.